Good evening, traders. Tonight we are on the 29th of November 2021, 20 minutes past 8 o'clock in the evening. And it was a fairly volatile session for the market today, ending in a beautiful Doji-like candlestick. We can barely see the body, wherein today's open was 17,094 and the close was 17,094. 0.15 difference. That's a beautiful classic doji on the daily charts of Nifty, but considering that the range was fairly high, on the upside 207, on the downside 850, 16,850, I'm sorry. So that's a considerable range of movement from the index, but closing with just 0.15 difference. That's one really nice doji on the charts. However, keeping the doji aside, let's talk about levels. What can we expect? How far can it fall if it does? And will it bounce back? All the important questions. We had 650, 750 gone. We had spoken about 350, 450, 17,350, 450 range. Now this is where the erstwhile congestion of volumes were. And we did see a bit of respect towards 350, 450 just for couple of days, and then a nice breakdown. At today's low, or I would rather say at Friday's low, the 1.61 Fibonacci projection of this fall has taken care of. So one target has been met on the downside. As it falls, I have not noticed any significant volumes creeping up on the downside as of now. But in this fall, if you take a look at the recent fall from this particular high all the way to today's price bar, then in this entire range of fall, today is the only instance when the index has managed a decent bounce back from its intraday lows. This was an opening low on the 25th of November, but apart from that, today we have seen some amount of buying coming in or bounce back coming in from its intraday lows, which means what? It's an important low now. From a perspective of even a short term to medium term, this is an important low. If this breaks, of course, there will be follow through selling. But if this breaks, that can also set in some more selling pressure, maybe a little bit of panic, and that is where bottoms are made. So if we have a break below, let's be a little pessimist first. If we have a break below today's low, eventually if the index breaks below 16,850, what can we expect? Well, I have marked this zone of volumes that we have noticed in a couple of volume profiles. And it's not a bad range. The higher border of this range is around 16,700. That's not too far from where it hit today intraday low. And it goes all the way down towards that 16,200 mark, which beautifully combines with the 261.8 projection of this fall when projected on the downside. Now, we can't say that it will come, we cannot say, but these are strong supports. If they come, they should act, they should halt the fall. Now, a better look for a short-term perspective is the 75-minute time frame. This is a 75-minute time frame. I'll get rid of these arrows first. Okay, so what are we dealing with? We are looking at the index, which is definitely in a strong downtrend, a beautiful opening up of the double moving averages here. Volume profile on the upside suggesting pretty decent resistance, 17,350 onwards towards 17,500, 550. This band should act as a decent zone of resistance. I have the anchored VWAP also, which will keep on coming down as we progress. Heikin-Ashi on the shorter time frame is also suggesting a bit of cool off in the degree of selling. So what I sense going forward, keeping in mind that we have a doji, keeping in mind that there's some level of divergence kicking in on the daily time frame, the index will, if it doesn't fall from here on, then I think it's a pretty good sign. And if it bounces back, then its main its main test of strength would be as it approaches the earlier support range, 17,350, 450. Now what I'm going to do is I'm going to turn them red so that the support now becomes a resistances. The text can also go red. So and I can remove these two targets which are being left, which have been met, and only one is left, which is the 16,200 mark. See, levels, any technical analyst who has some degree of experience with the charts will draw this and that, some trend lines, some indicators, and these are just levels. These are anticipated numbers. The markets will do what the markets will do. You and I can never challenge that, debate upon that. One thing we need to understand, that it is a reactive market, means the index is reacting based on some external negative development, and the external negative development which has taken place, whatever little I've been reading, will need some time, couple of weeks time maybe, to understand, is it really bad, or probably it's not that bad, or it's not much of a concern at all. I don't think it's going to be the third one, or else various economies and countries wouldn't have reacted so quickly. So it's a call, or it's a fact that we will get to know with a period of time whether it's really bad or not that bad. Not that bad would be a positive stimulus for the markets, and if it's really bad, then we can see some sell-off. So if this is the story, if this is the case, then I sense that the index would buy time. The index, because it's in a reactive mode, it will buy time, and the first leg of correction has happened, it's booked up, and probably it will stay within a certain range, and just to buy time to see what happens next. If it consolidates like this and it fails to take out 350, 450 on the upside, then the chance of a follow-through move on the downside increases. On the other hand, if we see that the index has taken out 350, 450 on the upside, then probably the markets have shrugged it off, probably the numbers have not increased, probably it doesn't look so bad, and we might get a decent bounce back, a decent recovery from the overall markets. Now we have corrected on a high to low basis close to 10%, which is a pretty healthy correction for the benchmark index. Strategically, I've not been, as I was probably recommending in my last video, either be an ultra short-term trader, that is an intraday trader, or be an ultra long-term trader. In between, it's going to be painful. In between, it's going to be really tough, because we are in a reactive mode. How we are going to open tomorrow and what's going to be the follow-through buying or selling is very, very difficult to predict. Is a very strong word, but very, very difficult to actually sense out at this stage. Volatility has gone higher, so whatever stop loss you put, the possibility of it getting hit is very high. Bank Nifty continues to underperform. A significant correction from this index. It has led the fall throughout. It's down more than 15%. Now that's a pretty good correction for the Bank Nifty. The last time we saw a correction in this tune was down here, when we had almost a 19% correction during the months of Feb to April. This lasted for 40 trading sessions. That's almost 2 months, and the index was down 19% through multiple legs down. As of now, this one is just two-legged down, one fall, bounce back, and the second fall. I can quickly run a projection on the downside to see if there's any levels left. Okay, beautiful. 161.8 was exactly from where we saw this short-term bounce back, and now the 261 is left, which is around 33,500. These are just levels. There's no guarantee that they have to be met, but I like this level where Bank Nifty lies right now. The previous erstwhile highs, the index has spent a lot of time in this zone in the month of June, late June, July, mid-July, and even mid-August. So this zone of 35,000, mid 35,000 to 36,300 is an important level, and volume profile also supports that. So important sector like a Bank Nifty has corrected significantly, is at pretty good supports, volumes are there, it has given us a bounce back from an intraday lows. So I sense that it will be a market which will be difficult to predict, It will be a market which probably would like to stay range bound. It will be a market where intraday volatility will stay. This is how bottoms are made. Downtrends are far more volatile than uptrends. Please keep this back of your mind. We are in a downtrend and we have to deal with volatility. The way I would suggest is, this is not the best of times to be a swing trader, maybe a short-term intraday trader, or maybe a long-term investor, but wait out. I personally would wait out for the dust to settle down a little bit. The swings of -200 to +150, once it settles down, that will give us much better trading opportunities. Patience is a virtue. In terms of sectors, small caps, media, PSU banks all corrected quite a lot, and they did not see that kind of a bounce back that we noticed. Realty, however, did a little pretty good. Amongst the positive sectors, apart from the Nifty, we have finance, which is marginally positive, but it was CNX IT. We've seen how IT is just buying time within this range. It's not looking so good, if you honestly ask me. Why do I say that? Well, number one, it is definitely range bound. Number two, from the highs, from the perspective of the highs are getting lower. Clearly, the lows are also to some extent angling on the downside. So the overall tilt of the index is slowly sloping down. The double moving averages which I'm using here has never turned cross down since a long time. The only time they came close to each other was here, and this is the time it's giving us a cross down. So any kind of bounce back is welcome, but if those bounce backs don't hold, then we can see some follow through correction. Amongst the top stocks, it was not to forget, Reliance was the one which is doing pretty good, bouncing back from expected supports. Let's see how it plays out. But Kotak Bank and HCL and TCS, as we can notice, IT stocks participating. TCS, we had this level marked, and that is exactly from where it is bouncing back, still in a downtrend. Be careful. Sun Pharma disappointed with over a 2% close. Now this this stock is close to very important levels, make or break if you ask me. This is it, and it is probably poised for further downsides towards that 700 mark. SBI is a very important counter, and if the Bank Nifty story has to go right, if it consolidates and bounce, SBI should play a role. iBank never played a role. I was expecting when it was consolidating here, but no, the stock continues to correct further down. Not much volumes kicking in here, no respect for these highs. These are not good signs. These are not good signs, because once it settles down and bounce back, those can be opportunities to sell. So we have to live through this not too sure kind of a market environment. We have to live through this highly intraday volatile market conditions. This is part of the game. If we sustain this, if we sail through this, of course on the other side of this volatility there will be a decent trending movement. If we break down and continue to fall, then I think from a medium long-term perspective, you can start looking to nibble into good quality counters, good quality stocks. Remember, we are in a reactive mode, so it will not take us much time to bounce back once everything bounces back. Fingers crossed. But till then, number one, take care of yourselves, and number two, trade less. Quality is better than quantity, and trade well, please. Thank you.